Tuesday, November 5th, Election Day. So everybody's thinking if it goes one way, the market's going to go this way, et cetera, et cetera. I'm a technical analyst. I understand that that's definitely something people would latch on to. I don't care. I think this market has hit a high point and did not have the October low, but is going to have a low in November. Whether it's happened already, meaning in the last 2 or 3, 4 days, I'm not sure yet. I don't think so. Here's the reasons why. We came down to a little support just yesterday, very accurately on the E-mini, oversold conditions, and it's bouncing some extremely normal in what looks like a little bit of a top here. Now, not very bearish. I don't think it's going to be a big move to the downside. I think if I'm right, and I may not be, we're going to go to 55.20-ish. Let's see if we can get below, stay below, close below yesterday's lows. That's the next key. In the meantime, I don't mind if it rallies a little bit more. Remember, and let's look at the 1-minute chart on the E-mini. No particular sign that's topping out right now. Just keeps on chugging along and making new highs this morning. But it has been overbought, and we do have some tiny divergences. But remember, this is 1-minute data, not particularly the most reliable stuff to work with. Now, the spider has that gap to close. I talked to you about this 4 days ago when it happened on October 31st. Gaps are almost always closed. They're like a black hole in space that tend to suck the price action back into the gap, which is exactly what is happening at the moment, I think. So far, so good. We haven't closed it completely. And that implies that if you get up to 579-ish, 579.5, the low on October 30th, and close the gap, that it would be a good short sale. And many times it is, or very close to that price. But what happens if it keeps going up? You got to have a stop in mind. You got to have money management in mind. You got to have something to trade with the next coming trade. Anyway, period. A lot of people don't think about that, and it's a fatal mistake. Always, when you have a trade, think about where your protective stop loss order is going to be before you get into the new position. Next chart. Spider rallying, closing the gap somewhat on this 1-minute chart, needs to get up to, and it's a little bit more accurate now that I got this. Okay, 579.25, maybe to the tick. So same thing. We're on our way up to close that gap, maybe. Next, there's also a gap to close on the QQQ, and it needs to get up to 495.5, and it is closing just a little bit of that gap this morning. But we're still high and last, basically, like the other indexes, as you would expect. Rarely do you see one on the high of the day and up some decent amount, while another index is on the low of the day, lower than the previous close at the same time. That does happen, has happened, will happen again, but it's very rare. So close the gap, turn back down again, maybe just continuing to build a little bit more of a top here. Next, there's your 1-minute chart, QQQ, strong. Next, NASDAQ does not have a gap on the NQ, but we came down to support and we're bouncing a little. Again, so far, I don't see anything particularly wrong with this bounce, and I think it's going to turn back down again very quickly. And you might use the results of the election as your excuse, whatever. Okay, NASDAQ 1 minute. Next chart, YM, Dow Jones, much steadier downward move, but a little bit of evidence is trying to bottom out, not too much. And we got down to a support level, but that didn't stop it quite as accurately as I would have normally expected. And we're bouncing now from almost oversold conditions, not quite, super close, but not quite. Okay, so wait. Yeah, there we go. I was out of scale. So yeah, super close to oversold, but not quite. I think it's going to stop rallying and turn down, period. YM, 1 minute chart. Now, Russell, a little different story. kind of between a rock and a hard spot. The gold or yellow zone up at the top is major historical resistance, which keeps stopping this market since the summertime. And has three significant events where it stopped in the same approximate price range. And we have oftentimes, or usually, come down below the levels we've reached so far. On this dip, I would say 2100, and I can't rule out, say, even, 2020, which I still think is going to happen. All right. 1 minute chart, Russell, slipping a little, minor new lows here. Bonds are currently down 7 ticks on the day. Remember, I've been forecasting a move down to these price levels, which it got to, 2 days ago, almost exactly. Also, in this rectangle or square, which was October, and oversold conditions and various support levels is what I expected, and I got it. Now, we did have a big outside trading range day on November 1st, Friday, and this is sometimes what I nicknamed a bass-backwards reversal. So far, you really can't say that's true. We haven't gotten above or even closed above the high of Friday, which is the beginning of it, going up. Meanwhile, it hasn't done the opposite either. So yesterday is a doji, and so far today, almost a doji, but down just a little bit or around unchanged. Frankly, no significant activity. I still think it could be bottoming out and starting to work its way up. Now, I got to mention again, as I've done so almost every single day for, I don't know, a few months now, this could be the timing I got right, the price levels I got right for the last shoulder low on the second and last shoulder this last week or two, for the first shoulder, inside shoulder in April. But the bottom of the formation with an ER buy signal is October 23rd, the lowest low. The inside shoulder was for the double shoulder head and shoulder bottom, taking 2 full years. The first inside shoulder was March of 23, and then October again of 22, October, November. So we're setting ourselves up for that's a shoulder and shoulder, head, shoulder, and are we making that last shoulder low? It's the right time. It's the right price. We're oversold. We reached downside objectives. There's a bunch of reasons to think it might turn back up. Let's see it do it. 10-year notes. Identical story, same formation, same size, same everything. Oh, by the way, in bonds, if this works, the big pattern predicts 140 on the upside. No, I'm wrong. That was for the small formation, the single shoulder, but that kind of is fading in the background for the small formation objective. And I would erase this neckline for that one and this little objective because that's the objective, 150.5 for this big formation. In other words, I'm predicting that we're starting to move back up to 150 and we're at 116 next chart. 10-year notes. Shoulder, shoulder, head, question mark, shoulder, question mark. Is it in progress right now? Last shoulder low, just like bonds? If so, big formation double shoulders, 126.5 upside objective. Small formation, and there's nothing wrong with what the small formation is doing if you just simply disregard that October low of 22 and consider that the only shoulder, then head and the only shoulder. It broke out, it topped out, it came back to the neckline, and now it looks like, I hope, that it's starting to move on its way up. Now, also, I got to point out, my strategy ER signals got a sell signal on September 17th, and we are short still from approximately 115.14, 10-year notes on, again, September 17th and ER3 the next day, September 18th. And we're going to get stopped out at 110.27 or lower if we can start slipping some more. But I don't think that's going to happen. Again, I think we're in the process, the beginning stages of turning up. I'll take a fantastic profit. I might even consider lowering the stop a little bit more, but leave it the way it is. Next, we got energies, crude, a little bit more rally. Not, or it was not oversold. It's not overbought. We're between a rock and a hard spot. Support is 66 and a little lower. It bounced off of it a week or so ago, close to it, not quite. On the way up, we've got a couple, three different resistance areas for a couple of different reasons. So I would not be surprised to see this bounce back up to 79. But anywhere between, probably 76 and 79, I'd be looking for sell signals, overbought conditions, and some sort of move back down. Next chart is heating oil. Support bottomed it out a week ago, up to resistance, but it's not stopping it, although today's high is above resistance. We're sitting right to smack at the top of that resistance level. We're not overbought. Easily, we can move up some more. And again, what about this last high, which is important, and to the exact day, a sell signal, October 8th, great trade, lasted a couple of weeks in this case. You know, with every ER1, there's a scalp and an overnight version. And with ER3, there's a scalp and an overnight version. And they have a lot in common, particularly the basic signal to get in or out of 3 and or 1, ER3 and or 1. And that is the severe overbought condition on my custom RSI and the bullish or bearish engulfing. It's a custom variation on the traditional engulfing. So here we go. Next chart. We got a buy signal yesterday on the natural gas. And I talked about this yesterday. Now, the little green line from the approximate middle of yesterday's range, it's a formula, almost got hit, which would have got us into another long position. But so far, the ER1 scalp did very well, not showing that at the moment. And ER1 overnight is probably still long, allowing for 3 to get filled a little bit lower than today's low so far. Again, if it gets down to about 2.655, it'll get long. And our low so far is pretty close, 2.670. So 15 thousandths, hundreds, about thousands. So not quite yet, but I don't mind it touching the green line. It can touch it very, very closely and turn around, and you're about to see that happen. Next chart is not the one I was talking about. Gold, overbought, topped out, starting to slip off, but this is a bullish engulfing today at the moment. Now, we're not oversold, so we're not getting a buy signal, but bullish engulfings imply the market's about to rally some, maybe not a lot, maybe more, but just rally a bit. And that could happen. I don't have anything in mind here that prevents that from happening. We just can't start closing above 2802 or everything turns bullish again. Now the trend is up. This dip looks like a standard kind of a downside dip and an uptrend. So with a bullish engulfing today, I wouldn't be surprised if it attacked the previous highs and made higher highs. Trend is your friend. You got to be friendly here. But what happens if it starts to close below 27.21? It's a little bit of a different story. We'll see what happens, though. Next, silver. All right, overbought, topped out, little bit of a dip, rally, no new high, kaboom, new lows. And today's low is the lowest low so far since then. But we do have a little bit of a bullish engulfing at the moment, at the bottom of the support area as well. So silver could turn around and make new highs again. Wouldn't be particularly surprised. What about platinum? Well, we had a bearish engulfing that's been working really nicely until today. Today we have almost a lower low, but I think today's low is not below yesterday's low. 986.7 today and 986.5. Therefore, we're 2.2 higher today than yesterday's low, and no bullish engulfing, but close. But we did get a rally. It was enough to stop us out. We've taken ourselves out of it. A very nice 4-day, 1, 2, 3, 4, 5-day short sale from ER1 overnight. ER3 never got hit, so unfortunately we're just unable, and all orders are canceled for ER3. Okay, what's going to happen? Almost bullish engulfing, so it doesn't count really. Look at the bigger picture. Rock in a hard spot. I don't know. We could bounce back up to 1042. We could slip back down a little bit more. Can't really tell. The fact that we got out of our shorts kind of implies it might rally a little more. I'd like to think that. I can't come to a conclusion here. High grade copper rallied more today. And after yesterday's minor new high and new high close, we got the follow through. So copper is now looking strong. It did bottom out in the support area. It took it 3 weeks finally, and it stopped us out of our really great short sale. Top of the market to the exact day. We got a sell signal September 30th. A few days later, we got another one. We've had some really good trades in copper, so we're now flat. Got stopped out of our short. What can I say? I believe today, this morning, unlike yesterday, I had changed the kicker, meaning the stop, to lower it down quite a bit. I think I mentioned that yesterday as well, that I would consider doing that. So I did, and then kaboom, we got out. That's okay. I like what, green, profit. That's all you need. Keep doing green, be all right. Next, soybeans. Minor little double bottom has an upside objective of right about here at 1056 and 3/4 or something. Yeah, 1056 is good enough. So is it going to break out, meaning a close above 1018 and a half? Well, not yet, but it's up a little today. Doji. Yesterday was also doji, but the closings are simply rising slowly. I need that breakout. Now, if that happens, we'll be going up fairly nicely in the next week or two. And people are going to look at this low here back in August and the low we had in October and think to themselves, well, maybe that's a double bottom. What happens if that's true? Then the upside objective is measured from here up to 1186. That's a pretty decent, substantial move. So I'm slowly turning a little bit more friendly. What happens if we drop below the lows of this little small double bottom in the last 3 weeks? Well, that does change the picture. A minimum back to neutral, if not neutral with a bearish tinge to it. Next, bear signal on the top of the market. Yesterday, ER sell signal. Today, the market is currently trading a little tiny bit lower, no big deal, but this is the interesting thing. Remember, ER3 gets in 1, 2, 3 days after the original sell signal, which was yesterday. We calculated price to sell at. The price we're going to sell at was about 45.88. Today's rally high so far is 45.93. We're short 5 ticks from the high of today. In advance, all orders resting. You do nothing, you wait. And the current tick is near the low of the day at 44.50-ish, 44.93. Great. Day trade scalp doing fabulous. New short ER overnight doing fabulous. What can I say? Everything's doing very well. So I'm turning bearish on oil. Keep getting those confused. Soybean meal. Support area oversold, trying to bottom out. Let's see if it can start to rally. I vote in favor of the rally because of the oversold and support area. And that oversold condition was pretty significant. Look at that, 12 something. It doesn't get down to 12 something all that often. And that time it rallied for a few days. That time it rallied for a long time. Where do we get 12? Okay. So getting way down, yeah, that it didn't rally but 2 days. That's a little disappointing. And that's not 12. But anyway, it's very low and could produce a pretty good rally. Next chart is corn. Support. Trying to bottom out. Like some of the other grains, I'm trying to justify some sort of bottom formation. We did have a buy signal exactly on October 17th, the bottom of the market. We're up a little bit today at the moment. It's a doji inside day, but we are still holding a short position from that sell signal, which I regret not having lowered the stop a lot more quickly a couple of weeks ago. Can't turn the clock back. But as long as you're not stopped out, you can still fiddle around with the stop level, but don't go pushing in the wrong damn direction. Continue to lock in a smaller risk and more profit if you can justify it. But I don't encourage fiddling around with the stops in the first place. Most people are not used to the strategy enough to understand what it's doing and why and how quickly and so on. So be careful. Now, Doji, we're still short. My stop is right there. Unfortunately, it's going to lead to a very small loss. Don't have too much elbow room. I could lower it just a hair more. Not going to make much difference. I'm either going to be right or wrong here. Okay, next chart. We got wheat, Doji, basically unchanged. Again, this low in the last week or two in the grains in general could become very, very important on a longer term basis. I really can't tell based on what's happened so far from those lows. But there are some things brewing that could be longer term bullish. Next is cattle, support starting on Friday, held, oversold. Nope, sorry, very close to, but not quite oversold. Yesterday, Doji inside lower close, but not below previous lows, still in support. And today, I don't know, Doji again, unchanged, down a little. Well, the broad resistance area is a bigger picture. Did stop the rally with a bearish engulfing on the very top of the market, and unfortunately, not quite overbought, very close. It would have turned red on the high if we had been overbought. But hey, you can't make the market do what you want it to do. You have to move with it. Bearish, looking for lower levels, looking for support levels to be tested. Back to hogs. Miss Piggy is almost closing the gap I've been talking about. Look at this, all in one day. Yesterday it started by a little bit lower close, and today there's substantial follow through, and it stopped right at the top of the gap. I think it's going to drop a little bit more to 80.75, give or take a few ticks, and close the gap. We'll see what happens when that happens. I'm not turning bearish, but if that doesn't hold around 80.75, then it could come all the way down to the bottom of this support and resistance area. We'll see. So I'm obviously just looking for a little bit more at first here and then see what happens after that. E-mini, still firm, high, 1 minute, dropping some. Spider, okay, NASDAQ, 1 minute. Yeah, it dropped a little bit more. YM, same thing, of course, as you would expect across the board. You have a great day and profitable trading to you.